Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit homegain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to homegain.com. Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Cammarosano, the general manager of HomeGain. Quick reminder, our show is designed to build, help, and educate you guys on the real estate markets here in the local D.C. metro area, as well as across the country. If you guys ever have any questions or concerns, the best number to reach out to me is the off-air number. It's 877-245-2030. That's 877-245-2030. Remember, guys, that's an off-air line, so if I don't pick up right now, it will go to a voicemail. Just leave your name, contact information. I'll be glad to get back to you by the end of business today. So there's an interesting article in smartmoney.com, and it was titled, Why U.S. House Prices Won't Recover. And what it was said, and this is a little excerpt from the article, is when will U.S. house prices recover? Likely never, but that's no reason not to buy. The latest S&P Case-Shiller numbers reported last week show that prices in 20 major markets declined 3.5% over the year through February. They're now back to 2002 levels. If we subtract for inflation, they're back to 1998 levels. But consider, after subtracting for inflation, prices are also back to 1986 levels and 1955 levels and 1895 levels. That's because the natural rate of price appreciation for houses is zero after inflation. Prices will eventually stop falling. They'll resume rising, but over the long term, they're unlikely to resume rising faster than inflation. Now, this is interesting, Lewis, because you and I talk all the time that it's, these prices can't really keep up with inflation, and that it's important that people pay attention to their cost of home ownership and not necessarily what the price of the home is going to do in the future. Would you agree with that?
You have to lock down it's one place you can lock down your future cost is by that long-term loan, your future shelter cost.
Yep. There was, I'm trying to think.
That's where I think he's saying that the price, where it goes, even if it goes down slightly, you'll still be okay because everything else will be going up around you when inflation hits. And eventually, home prices will rise with inflation. They may not just rise at the same rate as other goods and services and other commodities.
Yep.
But eventually, when you have inflation for a number of years, the house price will go up as well. But if you're smart and you've locked in your long-term low interest rate mortgage, then your costs will not go up while rents will be rising around you. And eventually, your house will rise too.
Yeah, and I'd say across the country, I mean, there's tons and tons of cities right now where it makes a ton of sense to buy just based upon what rents are compared to what your mortgage payment would be. He actually broke down in this article.
And that's now.
Yeah.
That doesn't take into account future inflation, where rents certainly the price will be passed along as inflation goes up.
Well, I always try to tell people, I mean, let's just take a worst case scenario. If somebody's renting for $2,000 right now, who's to say that in 20 years from now that's not going to be $4,000 a month? And if you were the person that took it upon yourself to buy and lock in yourself at 4%, sub 4% interest rates right now, 20 years from now your payment's going to be exactly the same, minus if taxes went up and your insurance went up. So that would be a tremendous increase in somebody's cost of shelter if they just never decided to buy.
And you could say that's not really that speculative of a bet that interest rates will not remain at historically low levels for the next 20 years and that inflation will remain nascent.
Yeah, and you and I have been wrong on numerous occasions saying that we thought rates were going to go up prior to when they have, but there's so much more going on. The markets are being manipulated. The Federal Reserve is artificially, manipulating the markets. With all that said, I feel long-term interest rates have to rise. It's not a good investment for banks to be lending out at 4% interest rates. It's just not. And
we know that they're being held down artificially low, so eventually normal market rates, banks would want to get a certain rate of interest for their risk.
And I would say that's probably closer to a 6% number. You know what I mean? A 6 to 6.5% was what I think that, interest rates where it makes sense for banks to really want to lend at that.
That's interest rates, and then you have to counter in inflation.
Yep.
What will the inflation rate be in dollar terms when you keep printing more money? Eventually, that's going to find its way through the CPI, the core, the non-core, and it's going to go higher.
Yeah, and I just feel like, where we are, I mean, we know that there's such distressed real estate markets throughout the country, but they have to keep interest rates somewhat low, because if interest rates were to spike, then the sales would drop off, and we just have more and more people that are going to be in a negative equity situation. So I think that rates will stay low for an extended period of time. How low is the question? And I think we've kind of reached that point where I can't really see them getting that much lower. I know a lot of people are like, okay, well, what's the optimum time to lock in your rate? And to be honest, I don't even really take that approach. I say, okay, what is your payment today? Can you afford that payment? Take interest rates and everything out of it. Can you afford that payment? Do you feel like you can make that payment for the next 30 years? If yes, it's probably a sound decision. Don't just look at your sales price and say, oh, I can't afford a $400,000 home. Well, what is the payment on that $400,000 home? Can you afford it? Are you factoring in all your other utilities, your food, your gas, and all those things that the lender's not necessarily going to consider? Remember, the lender's just looking at what's on your credit report. And that's pretty much going to include if you have any mortgages, any auto loans, any credit cards, student loans. It's not going to include cell phone bills, insurance, utilities. They don't take any of that into consideration. So the fact that some lenders will still lend up to 50% of your gross income is almost crazy to me, because what ends up happening is a lot of people end up getting into this home realizing that they don't have as much money as they thought they were going to have, and then they're left scratching through their savings, having to make that payment along with all their other bills. So it's important that you're working with somebody that's not just going to say, oh, you're approved for a loan, because anybody can do that. You can walk into a Bank of America, Wells Fargo, Citi, they pull up their computer, throw your information in there, they'll give you an approval. But did they really take an interest in your long-term and short-term goals to make sure that this was a good decision for you financially, that wasn't going to put you in a bind to where you felt like you were in prison living in your home? That is much of the case of what happened in 5 years ago, which got us into the mess, which is now we're now trying to still filter through all those people that have either lost their home through foreclosure or are now trying to negotiate a short sale with their lender. It's important, and this article actually shows that a good way to actually check in your area if it makes sense to buy. There's actually, and I believe there's a couple sites that actually give you these price to rent ratios. But to turn a price to rent ratio, you basically simply divide by one by the ratio. So a lot of companies will actually provide these price to rent ratios in the different cities. But in New York City's area, the price to rent ratio of 14.5 is equal to a rent yield of 6.9%. So basically, essentially, an investor could make about 6.9% return on his money if he were to buy a property and rent it out to a renter. That's the yield he would get back. The article is saying that any time that you can have a rent yield of around 10%, then it probably makes sense for you to go ahead and consider buying. I know that in the D.C. metro area that's all over the place. You can get that all over the place, and I think that that's why we have such a low supply of homes in the Northern Virginia area. The job market's relatively stable compared to the rest of the country. With prices they're still relatively low. Interest rates are low. So we have a lot of investors out there that are cash buyers, but also some investors that are actually still financing a portion of that purchase. I think that, like I said, you can do a quick analysis, find out what properties are renting for in the area, and look and see what your mortgage would payment if you bought the home. Now, some people think you got to have these ginormous down payments. Not necessarily the case. There are definitely options with FHA, which require a 3.5% down payment. In rural areas, there's the USDA loan, which is 100% financing. Now, obviously, there's income restrictions on those loans. Best advice I can give you is just reach out to me. I'd be glad to see if you fit into one of those. It's 877-245-2030. That's 877-245-2030. Bottom line is, Lewis, you and I can both agree that we feel like, by taking out a mortgage at a low interest rate, buying a home, locking in your long-term cost of shelter is probably a very smart decision at this point.
Case basis, but in many instances it could be.
Yeah, and I say this all the time because I'm not one of those guys that's just out here saying that home ownership is for everyone. I don't think that it is. However, for many people right now, I think that it does make sense to buy versus rent.
And it does make sense, as you mentioned earlier, to have that conversation with a professional to examine your circumstances, to see what you can qualify for, what prices are, and whether home ownership makes sense, and whether you can afford it, and whether you'll do better than renting.
Absolutely. So we'll end on that note. But Lewis, I want to thank you again for coming on. Great show.
Thanks for having me.
And I'll talk to you real soon. Guys, thank you guys for tuning in. We will be back again next Monday from 2 to 3 p.m. at WNEW 1580 AM. If you guys have any questions, concerns, or real estate needs, remember the best number to reach out to me is 877-245-2030. That's 877-245-2030. And remember that, guys, that's with any credit issues that you may have, if you're having problems trying to obtain a home loan, if you're just looking to get started on your home search and not sure where to turn, I'm here. I'm here to answer any of those questions. If for some reason I don't have the answer, I will find the person that does. There's no question that is a stupid question. Just remember that. I'll be back again next week, guys. Have a great week. Talk to you soon.